Councillor Perry, I've now set the meeting to live.
Okay, and I can see we've got Councillor Moshinson and Mabadias. Is Councillor Karima Mariko, are you present? Not at the stage. Okay, so we've arrived at 6:30, everybody. I'll call the meeting to order and we can get going. Just before we do go through the formal agenda, I'd like to just make some...
Chair, I know that Councillor Abadia has had issues connecting. I'm not sure if he's actually logged in. He's had issues with his connecting. So,
okay, I minded to give it another moment then. I can on my screen, Councillor Moskinson, I can see KR is present, but no video at this stage. So maybe we're just. Councillor Abadia, your video or audio is not currently on at this stage.
He was hoping that somebody.
Hi, David. Can you hear me?
I can hear you. Your video is off. You don't need your video on, but as long as you can hear me, I'm minded to make a start, Councillor Abadia.
Okay. Could you proceed? I'm just trying to fiddle with this. Yeah. Carry on, please. Thank you.
Okay, everybody, can I formally welcome everybody to the first virtual meeting of the GARMS committee, and like with many other chairs of committees which have happened virtually, I would like to just sort of thank the IT support team and Democratic Services. Obviously, this is not the most ideal way of meeting, but nonetheless, we're convening and getting on with business, which is what we're here to do as a local authority. And so thank you to all the support staff who have allowed this meeting to take place this evening. So for anyone who has joined us, from members of the public and observing, present at the meeting this evening is members of the Governance, Audit, Risk Management and Safety Advisory Panel Committee. We've also got some council officers in attendance who will be speaking under the relevant items. And can I refer also members present to the members and officers to the published protocols for holding virtual meetings? And if I could just go through a couple of them just to aid smooth delivery of the meeting. Firstly, members of the committee should ensure that they have their videos on at all times, but put microphones on mute unless speaking, please. Secondly, other members and participants should switch off their videos and put microphones on mute until they are invited to speak. In case of a technical problem this evening, everybody, the meeting will adjourn until the issue is resolved. And if there is a technical problem which persists and the meeting is incorrect, the meeting may need to be abandoned and rearranged for a later date. Obviously, we hope that doesn't happen. And finally, the meeting is being audioed and video recorded and will be available to watch and listen to on the website following the meeting. Just to support me in chairing the meeting this evening, we don't have a large committee in and we're usually pretty well behaved as always, but would members and other participants raise their hand from the function toolbar to indicate that they want to speak? I don't at my end get an indication of who puts their hand up first, but will endeavour to try to follow in order, so bear with me. And please switch off your mobile phones to put them on silent mode. So now we've gone through the necessities to facilitate the meeting. I'm minded to move straight into agenda item 1, which is attendance by reserved members, please. We've had one apology from Councillor Assad and Councillor Chloe Smith, who is in attendance, will be reserving for Councillor Assad. Do we have any reserved members? I don't believe we do. Excellent. So if we move very swiftly on into agenda item 2, which is declarations of interest. There has been a published declarations interest sheet. I know not all members of the committee may have had opportunity to register any interest, but this is your opportunity to do so now. Okay, thank you. We don't have any further interest to declare. So if we move on to agenda item 3 formally, which is the minutes of the last meeting. Again, we've had an opportunity to make any comments prior to the meeting, and this has been published. Again, not all members of the committee have had an opportunity to respond, and so this is their opportunity now on the declared minutes to raise any interest, any minutes that they wish to discuss or query. Okay, excellent. Thank you very much. We move very quickly on to agenda item 4, which is the appointment of the vice chair. This is our annual, we usually do this every year, and can I ask for members to make any nominations for the position of vice chair? I can't see, Councillor Moshinson.
May I nominate Councillor Abadia, please?
Okay, thank you. Is there a seconder for the nomination of Councillor Abadia?
Chair, I would be happy to second the proposal if possible.
Okay, thank you, Councillor Benjamin. Is there any other nominations? No? Okay, so therefore, with one nomination, can I formally approve the nomination of Councillor Abadia as the vice chair for the upcoming municipal year? Agenda item 5 is public questions, of which to date we have received none. And moving into agenda item 6 formally, if I can, and ask if there's any members who have any petitions they wish to present. Councillor Moshinson, are you indicating? Okay, no problem. So we don't have any petitions. I have not been notified of any deputations in agenda item 7, and so we can move on. And again, for agenda item 8, which is references from council or cabinet to the committee, of which I have not been declared of any. So if we can move on into our first main agenda item this evening, which is the annual governance statement for 2019 and 20, which is agenda item 9. And this starts on page 13 of our agenda bundle. And just can I politely ask, although I won't be rigid, as members do come in after the officer speaks, if where possible, you could possibly name the page in which you're referring to your question or query. It might aid the other committee members or those observing in order to follow any questions. So without further ado, can I welcome Susan Dixon to our first virtual meeting to kick us off with the annual governance statement. Susan, hope you're well, and over to you.
Yes, thank you, Chair. Hello, everybody. Nice to see you all. This is the annual governance statement. As you know, you are presented with an annual governance statement to review every year. This is actually a second draft. So the version in the draft accounts, which is the next agenda item, is the first draft. And then we've actually updated this because we had to prepare a draft quite early on, and not all of the assurance work was completed for obvious reasons this year. It was took slightly longer to get to that point. So this is a second draft, and the changes from what's in the draft accounts are shown in red in the report, just for ease, basically. There's a couple of things I'd just like to draw the committee's attention to. There's a whole section on COVID-19 impact on governance, which we were required to include this year, and that does go into quite a lot of detail there. And then section 4 gives you the level of assurance, and that's the head of internal audit opinion, which broadly speaking, at a high level, is similar to last year, as in good with improvements required in a few areas. The details that are contained within that paragraph are actually obviously different from last year, and also there is more detail in the report that comes later on in the agenda, the year-end report for internal audit. There is also a little bit more detail of how we got to that conclusion, how I got to that conclusion. And the other thing, obviously, that I need to draw your attention to is a new significant governance gap for 2019-20, and that is around the depot redevelopment project, and it is in relation to basically a projected overspend, significant projected overspend, and several breaches of council's financial regulations and contract procedure rules. This obviously, there's not an awful lot of detail in here because this is a public facing document, so this is, if you like, more of a marker than anything else, but I am working on a detailed report to bring back to you, and then you will have much more detail and be able to ask questions a lot more openly, because it will be a part 2 item. Happy to answer any questions.
Okay, thank you for that introduction. We'll open it up to members of the committee now who wish to ask questions of the annual governance statement. Have we got anyone who's indicated? Councillor Ali. Councillor Ali, you're...
Yes, I'm trying to unmute myself, but...
No, he's muted himself.
Councillor Ali, do you wish to unmute yourself? We can't hear you currently. We still can't hear you. Can you ask your question if you've unmuted yourself, Councillor Ali? Okay, we still can't hear you. I'm just trying to. Councillor Ali, can you? No, we still may having trouble hearing you.
Can you hear me now?
We can hear you loud and clear.
All right. Thanks, Susan. Thank you, Chair. Thanks.
Over to you.
Just a question on financial impact. We got a gap of 11.2 million, right, for the next couple of years. At the moment, we are not sure how long we are going to go with this COVID-19 in my unforeseeable future. I mean, do you think this gap might increase in future?
I think actually Dawn might be better to. You're not talking about specifically in relation to the depot. You're talking about the council.
No. On financial impact, I'm talking about.
Oh right, okay. Perhaps Dawn would like to answer that.
Yeah. Yeah. What we do know is when we took our budget, our MTFS to February, we had a published gap over the 3 years of £22 million. Now, obviously, we have had a significant impact of COVID on this year. And we have said consistently that we are concerned about the legacy impacts of COVID on both our expenditure and income budgets going into next year and those years beyond, for which we, at the moment, we haven't been informed by the government we're going to get any form of emergency funding, as we have received in this current financial year. What we are in the process of doing is at the moment, and we explained this process when we're taking our Q1 report to Cabinet this Thursday, is we are now doing very, very detailed analysis over the 3 years of the MTFS in terms of the impact of COVID as best we can determine that. So we are looking at our business as usual pressures. We are looking at all the legacy impacts of COVID to see that. We are working with directorates to make sure we do everything we can to reduce those cost pressures, so that when we do get the announcements of our government funding, which is probably going to be very, very late on in the year, probably not until December, so it's sort of going to be very challenging around draft budget setting. We will have done everything we can to impact on our pressure, and then it's really waiting for the results of what the government will give us in terms of funding, so we can add a lot of clarity around that funding, around our revised funding gap position. And we are going to bring a report to October Cabinet that talks through the process of what we are doing on the MTFS, and we will attempt in that October report, based on the information that we've got, some sort of potential scenarios of where we think our financial position may be pending government announcement.
Yeah, Don, but you know, there's a deficit of 2 trillion at the moment, you know, and do you expect any funding from the government in future? We don't know yet.
I mean, it's very hard to say. We don't know. I mean, clearly, the government have committed to a comprehensive spending review for 3 years, which I think we were a little bit surprised at. We expected a 1-year announcement. So, you know, and is that good or bad? We just don't know. It's very difficult to tell. I think the government have committed to listening to local government, understanding what the pressures are. They are very much realising now that the pressures are just not within this year, and the impacts are going to continue into future years. There are pressures that we already have. So, for example, if we think about adult social care, we have for the last few years received one-off funding for adult social care. So in this financial year, we received, I think it was 3.2 million. Those pressures of adult social care haven't gone away. So we will be expecting additional funding for that. You know, that would be our expectation, but it's very difficult to tell at the moment. So I think we just have to, you know, make sure we're tuned into every single channel that starts to give us some ideas of our funding position and really wait for the announcements.
Thank you, Dawn. Thank you.
Dawn, just before I bring Councillor Abada in, he's indicated, just following on from Councillor Ali's question with regards to, I think you just said detailed analysis of budget lines. I think some of us who have been on the council for a number of years who have seen budget rounds where we've had to make budget reductions and efficiencies, we often have a detailed analysis, but given the concern at the moment with COVID, what additional detailed analysis will occur in order to try to meet in-year pressure?
Well, in terms of our current financial year, we have said for the last few months that we think that we will be okay for this financial year and we will be able to achieve a balanced budget. So in our Q1 forecast, we are forecasting, I think it's about £2 million budget pressure, but we do believe that by the end of the financial year we can get that down to 0, and that is taking into account the emergency funding we've received to date, which is circa 15 million, and it makes an assumption on a level of income that we will get from the sales fees and charges compensation scheme. What we are doing now is trying, in terms of detailed analysis, is trying as best we can to say where going, so for example on income, we're going through all our lines and we're saying, what do we think, with, you know, based on a set of caveats, expectations, where do we think we are going to be there on income, on this income next year? So we can start to get some flavour of what is our pressures and such going to look like next year. So in the budget report, in the budget report this year, we already flagged up a number of pressures around the adult services budget. They're obviously being re-reviewed. What is the business as usual impact on them? How has COVID impacted on them? So we're doing it across all our directorates. What do we think our expenditure pressures are going to be? Breaking down all our income, where do we think we can get to next year? What do we think the impact is? To be fair, some of it is, you know, you are having to make the best educated guess you can. So we are saying, well, this is, so then what we're trying to do is say, well, we can have some ranges of where we think the potential impact on the MTFS could be. So for example, on adults, we might say we anticipate current demand and COVID as X. If we got some government funding in the region of what we got last year, the pressure could be reduced to X. So we're trying to do all that analysis across all our income and expenditure lines. That's what we're doing at the moment.
That's helpful. Thank you. Councillor Bardia.
Thank you, Chair. Good evening, everyone. I have a few questions on the governance report, if I may, Chair. So the first question, Susan.
Councillor Abadia, you're on mute.
Yeah, you're muted, Councillor Abadia. We heard you straight off and you've gone into a mute mode before you started the start of your question. Could you just start back from the start of your question? And
okay.
Thank you.
Right. So am I there now?
We can hear you. Over to you.
Okay. Thank you. I'll start again. So Susan, it's just about, my first question is regarding what risks, if any, have changed in terms of the key risks that you've had to change in terms of the current situation that effectively, I know finance has been spoken, so I don't think we need to dwell too much into that, but more into sort of key risk areas in terms of governance and delivery of key services. How has that been affected in terms of the risk register?
Susan, the floor is yours.
Yeah, sorry, I'm just unmuting myself. So in terms of risks you're talking about, you mean from the point of view from COVID-19, Councillor?
Yes, generally, I mean, that's a key driver, of course, but you know, and it starts kind of creeping into everything else. Sure. Yeah.
Yes, it does. So we're currently our last risk register was for Q4 of 1920, and we obviously there was a bit of delay in actually updating the risk register for Q1 and Q2, and that's currently in hand at the moment. So to be honest, I would be able to give you a fuller answer once we've actually got all of those updates.
Okay.
And that will come to the next meeting.
Sure. Okay.
Yeah.
Just with the, yeah. Okay, fine. I understand. I just got a few more questions for you. On page 32 on the governance report, you have a brief summary. So if you could just explain in terms of what's happening or in terms of what are your findings. This is in relation to the subsidiary trading entities, because I think one of the key points you make there is that because of the nature of it, there is not much happening in terms of governance, but the fact you include in the report. So just understanding the kind of work you might have done to come to the conclusion that governance is fine, or it doesn't need reviewing further.
Oh, okay. So for these different Sandcroft, etc., for the different bodies, we've actually undertook it's like an assisted self-assessment, basically. So a bit similar to the evidence table. We've taken out key elements of the evidence table, which is Appendix 2 to this report, and we've sort of and followed SITFA guidance about, well, what should we be expecting within these separate bodies, and then we've basically we've got a self-assessment for each of those, apart from one which I did mention is outstanding, and that will be reviewed in 2021. Some of them, you're quite right, it does say there, some of them didn't have much activity during 1920 because they're being wound down or they're changing what they're doing, and therefore obviously I haven't spent an awful lot of time on the governance for those areas, but we have actually done these assisted self-assessments for all of the others to come to the conclusions that we have there.
Okay. No, that's fine. Would it be okay to share some of the, because I know you said you remove it from the detailed appendix. Are you able to share any of that kind of self-assessment on the governance side of those entities?
Yeah, certainly we could. I mean, I could bring it to another meeting, or I could send it through to you if you'd like to have a look at what we've done, whichever is more appropriate.
Yeah, please. All right, thank you. I've got one more question, Chair, with your permission, or shall I let someone else go first?
No, the floor is yours, Councillor.
Oh, thank you very much. Again, just coming back to the Appendix 2, page 77, item 6.16.
Sorry, say that again.
Appendix 2, page 77.
Appendix 2.
Item 6.16. Okay, the actual page is 77 of the documents.
Mm-hmm.
Yeah, okay, on there.
Yeah, again, just a quick question in terms of understanding your process in kind of, making your comments and observations and conclusions. The reason why I ask you this question about data quality policy, one of my, concerns has been that when we're presented with data, for example, for demographics or change in population, projections in the next 5 or 7 years, there seems to be inconsistency in terms of one table says there's no growth in population, and then some other document says there is. So I don't know, like, if you get an opportunity to kind of say, is there a one source or one pool of information that every department's using? So what is in place in your knowledge or awareness that everyone's using the same data, and there is some kind of consistency to the quality being provided to every department?
So again, this is an assisted self-assessment, and we do look at certain bits of evidence as indicated on the form, which is the data quality policy. So we have a data quality policy in place, which actually should prevent exactly what you are talking about. So it would be quite interesting for me if you could let me know where you found these anomalies.
Sure.
And we could perhaps look into that in more detail.
Yeah, I would be most grateful for that. Thank you.
Yeah, okay.
Okay, Councillor Moshington.
Thank you, Chair. Susan, just on your level of assurance on page 33, section 4.
Can I get back to it? Sorry. Yeah.
Just interested in your choice of words. Good with improvement required. Is that not quite good?
And this is something, actually, this, as I said, this is the overarching comment is similar to what we had last year. And prior to that, in previous years, it was just good. And this is my way, if you like, of giving it a slight shading, because it's recognising that there are actually a few areas, like, for example, we do have a significant governance gap. We have had some red reports. So there are a few areas, but it's not overwhelmingly bad by any means, but I think it's just a recognition that it's not all good. There are some areas that we do need to have some improvement in.
And there is no sort of set categories that we define. It's good as just a word that you selected rather than a scale.
The detail is, again, in the year-end report, there is a bit more detail about how we get to that, basically, yes. And the more detail is included in that report. But at the end of the day, this is an opinion, and opinions are, there is a bit of a freedom about opinions, if you like, rather than you can't be completely regimented about absolutely everything. It is an opinion.
No, okay. Let me qualify my question. It was more along on good is an expression of opinion rather than a category now in a rag-like category.
Yes. Yeah. I mean, again, you try to be as scientific as you can about it. Yeah. But obviously, and as I say, in the year-end report, it does show you everything that I take into account when I'm coming up with this opinion to try and, if you like, explain how I've reached that opinion. And that is, if you like, you can compare year on year by looking at that. And it's about consistency as well, making sure that I'm being consistent in how I'm expressing that.
Thank you.
Councillor Benjamin.
Thank you very much, Chair. Alison, if I could refer please to page 31 of the report, and it's mentioned that the council's trading structure consists of 5 separate entities. I noticed that one of those entities, which is Concilium Assets, is a limited liability partnership. Why is it an LLP? And I'm assuming that there's only 2 members of it, namely Harrow Council and Concilium Group. And is there a different governance regime which applies to that particular entity on the basis that it is an LLP?
So when we do this piece of work for governance, what we're looking for is very similar type sort of governance processes in place in the way that things have been set up. So for this piece of work, there isn't any difference in how we would judge is the governance that's in place. That doesn't mean that there aren't that they don't do it in a slightly different way. It just means that the questions that we ask them about how they're set up, and so it might be that each one has a slightly different, more formal or less formal way of doing things, but it's actually making sure that the governance is there. So I can't answer your question in any great detail. I don't know whether Dawn's got anything she wants to add to that.
If that's okay, Chair, I could maybe add a little bit to that.
Yes, please, Dawn. Thank you.
I must confess, in terms of the very specifics about why it was an LLP, I'll have to dig out the original cabinet report for you, because there was a lot of consideration about what was the most tax efficient way to set up the organisation. One of the benefits of it being an LLP is we get the dividend directly into the council. Which is we get 95% dividend into the council that comes in directly, and then we have 5% that goes through the trading structure. So obviously that's very beneficial to us. In terms of how the LLP operates, we have a quarterly stakeholder meeting with the LLP. So that's how the council maintains its stakeholder responsibilities, and that is formed up of Councillor Swirsky, myself and Hugh Peart as the council's monitoring officer. And then in terms of how the LLP runs, it runs pretty much like a normal company, in terms it has to be audited, it has to submit all its various returns and all its various returns. So it operates like a normal company. So if you do want the very specifics, because I remember when the report came to cabinet, there was a lot of detail about why it was best to set up in this way. I'll happily forward that on to you, but that was one of the main reasons, looking about the most efficient way to run it.
Okay, I'm sure that there is a good reason behind it. It's just, it was unusual to see in the report that 4 of the trading structures were limited companies and 1 of them was an LLP, and that's why I asked that question. Thank you for that. I've got one final question, and that's to Susan. When Susan gave her presentation just now, she mentioned almost as a throwaway comment that there was a breach of procedural rules. Are you able to expand on that, and what were those procedural rules that were breached?
Hello, I'm sorry if it sounded like a throwaway comment. That wasn't my intention.
Like that.
I presume that you're referring to the significant governance gap.
Yeah.
So the breaches of I've got to be a bit careful here, because this is a part 1 item, obviously, and as I said, you will get a more detailed report which will give you all of this information, but will be a part 2. But I can tell you that the breaches of the council's financial regulations related to environment rules, and the breach of the contract procedure rule related to a Gateway 2 report, a revised Gateway 2 report, which is permission to enter into a contract.
Okay, thank you very much for that.
Okay, I don't have any more members of the committee who have indicated, but I think just to sort of wrap up there, and as Susan has indicated, there will be further information on that breach, Councillor Benjamin, at the next meeting, and as the chair of GARMS, I have been briefed on that. And I think what my comments would be on the annual government statement would be, I think it's a pretty fair assessment, actually. I think it's important that we highlight the positives, which we have done, and then also being transparent and upfront as early as possible in public with some of the challenges, with one which have been questioned already. And so one of the positives for me within this statement is some of the external involvement with the council, namely the peer review within the Adults Services Department, and also 2 Ofsted inspections within Children's Services came out positive. And so I think the assessment of where we are, the state of the nation, if you like, is a pretty fair one with regards to good, but requires in some areas to improve. So with that said, then, if with the committee commission, Councillor Bardia,
raised my hand, sorry if I got you there, but I'll let you finish anyway.
Oh, well, I was going to move to the recommendations, Councillor, but if you wish to come in before I move on, please do.
Yeah, okay. My question is incidental to Dawn's answer just a few minutes ago.
Okay.
In the papers, So I might just ask it. I'm more than happy for her to come back to me, separately. So I just noticed, and Councillor Ali can help us out in that, because I think Dawn said that, oh, you get a dividend from LLP. So my understanding was you don't get dividends from LLP, you get profits. So so just to clarify that. And secondly, are we saying that the councils engage in some kind of legal tax avoidance scheme here in terms of what we have done?
No. In terms, maybe I've just used the wrong word in terms of dividend. What we do is the profits of the LLP, 95 after we've made certain provision, after the company's made certain provisions for for building up a reserve to repair the properties and such. Whatever is left in the company, 95% comes back to the council, and we have now reflected that in our MTFS, and 5% goes into the company structure, and that is the base on which the LLP is set up. Just to reassure, we are not involved in any tax avoidance schemes. This has all been done properly. The company's been set up. Has been set up very properly, and in the, when I say tax efficient, it doesn't. I'm not saying that we're in any type of avoidance. This was the best way to set the company up for the benefit of the council, making sure we were completely tax compliant. It probably is worth, if I do send you, I will dig out the original report, because it might be quite helpful for some members just to read that to get that assurance.
Okay, thank you, Chair, and thank you, Dawn.
No, you're welcome.
No, that's fine. I thought that was helpful intervention actually, and a clarification there. And I think when any companies are being set up, I think there's different options for local authority, and I think that's probably the most beneficial legal avenue always explored. And so that clarification, Dawn, was very helpful. Okay, then if we can move to the recommendation then, and of course this is subject to the information being circulated to Councillor Bardia as offered up. So with that said, can we approve the recommendation on page 13 of the report?
Yes.
Okay.
Yes, Chair. Yes, Chair. Agree.
Thank you. We move now to item 10 on the agenda, please, from pages 85 within our agenda pack, which is the draft statement of accounts for 2019 and 20. And this is over to you again, Dawn, in order to introduce the report.
Thank you, Chair. So as you can see, we bring this to the GAMS committee every year. So this is we are bringing to you our draft statement of accounts and our draft pension fund accounts. We, as you say, you get these every year. We are in the process, our accounts are in the process of being audited by our external auditors, Mazars. They've been in about a month. And they will have their report concluded, and they will be coming back to the next GAMS committee in October, when they will give you their formal opinion on our accounts. The accounts have been subject to the public scrutiny, because we have to publish our accounts for members of the public to come in and ask us any questions, raise any concerns. We didn't get any questions or concerns raised. So really, I think I will just ask if members have got any questions rather than taking through the detail, because as I say, these are our draft accounts if you've got questions. And I have got several of my colleagues here tonight who have a lot of detailed involvement in the accounts that can answer questions if the councillors would like to raise any.
Okay, I'm just trying to Councillor Bardia, you're first to indicate.
Yes, I've got a few questions. I'm happy to ask one or two, and then members can follow, and I'm happy to follow up later. So I don't take all the questions in case members have a similar question. So Dawn, just coming back to you on a few things, if you could be kind enough to help us. So I think one of the things that I kind of, would like to get some kind of relationship is between our budgeting process or budget, which is what members get notified of on a regular basis throughout the year, and comparing that to the actual outcome in the financial statements. It's very hard to actually tie up the two. So could you just explain that process, or which tabulation helps us with that in the accounts, in the financial statements that we are presented with today?
Yeah, okay. I will start off then, but what I'm going to do is I'm going to ask either Paul or Thomas to come in, because they'll be able to pinpoint you to maybe the relevant documents in the papers. In terms of the budget process, obviously we set a budget every year, and we say on that budget, we set a budget, and then obviously we monitor our spend during the year, in terms of are we underspending, overspending on budget, and at the end of the year we have a year-end balance, and it's that year-end balance that will appear in the statement of accounts. So the statement of accounts is about our sort of our profit and loss, well, for want of a better word, profit and loss account, and our balance sheet. So the balance sheet doesn't really too much we don't really monitor the balance sheet as we go through the year. That is more a statement of accounts issue, and then it's the end result of our annual monitoring that goes into the statement of accounts. Now, what I'm going to do is I'm going to ask either Thomas or Paul to come in, if that's okay with you, Chair, because they can pinpoint us more to the pages in the accounts, where there's more of a sort of a correlation. So is it Thomas or Paul?
I'll take it if that's okay, Dawn.
Okay,
can people
thank you,
hear me?
Thomas.
If we could just ask the officer just to introduce himself for those who may not know him, and obviously the public who are watching, before you just introduce your response.
Okay, I'm Thomas Clark, and I basically put together most of the financial statements for the council.
Thank you.
To answer the councillor's question, the key note which ties the management accounts back to the financial statements is note 5.5. It's called the expenditure and funding analysis.
What page is that on, please, Thomas?
I've got page 34 of the accounts, but I'm not sure which page number it is in the pack.
Okay, I can.
5.4 was that, Thomas?
Sorry, 5.5.
Hold on, 34.
So that's page 126, I believe.
Yeah.
It's 126, Councillor Bardia, yeah?
Okay.
Thomas, could you just explain a little bit about how that ties the two together for the councillor?
Yes. So we include a summary of the management accounts, the final outturn position, at the beginning of the narrative report, which is at the very front of the financial statements. And then what note 5.5 does is it takes those figures and it shows how they reconcile to the figures presented in the accounts in the comprehensive income and expenditure statement. And then note 5.5.1 breaks down the adjustments, the differences between the statements and the outturn into a little bit more detail. The main adjustments are to do with capital charges, things like depreciation, impairment of assets, that sort, capital grants, that sort of thing. Items that wouldn't appear in the outturn report, but which do appear in the financial statements.
Could I just ask you sort of, because I know there's an analysis there, but for the benefit of most of us, which we wouldn't really have any idea of why you make those adjustments. For example, in community, one of the differences is 12.2 million and resources and commercial 7.2 million. So I'm just trying to understand this reconciliation, because it's either you spend that money or you didn't. So why would it need an adjustment? If you could just help us understand things like that in 5.5.1.
Okay. Some of the larger adjustments, I think, in that column where the 12,274,000 are, is to do with the pension fund. The figures that we put in the accounts for the cost to the council of the pension fund are different from the figures that go into the outturn report. The figures that go into the outturn report are on a cash basis, basically, whereas the figures that go into the accounts are on an accruals basis, and we get an actuary to assess what those figures are. But they're normally much higher than the cash figures. So an awful lot of what's in the other differences column that you can see there will be the difference between the cash and the accrual basis of accounting for pensions.
Right. Okay.
There'll be a lot of other similar items. That's one of the main ones.
Okay. All right. I think at this point, my main issue was what reconciles what. So I've known that. So I'll have more questions, but I think probably this is not the right forum for that. We don't want to be sitting here asking you more questions. Could I move on, Chair, to my second and third question?
Yes,
please?
the floor's yours, Councillor.
Okay. So Dawn, just going to this accounts, I had one question about. Oh, I've lost it. There was a note for the fixed assets. Anyone know where that is? I just had it, but it's difficult navigating. Yeah.
Thomas, can you tell us where the note, what number the note for the fixed assets is? Because you put these together, so you're more familiar with all the various.
Yes. The fixed asset note is 5.11, 511.
511. Okay. Yeah, there you go. Thank you. So just coming to this notes, a few things just occurred to me because I mean, I was trying to follow this through your income and expenditure statement. So a number of things I observed here. One was that when you have a written off depreciation, normally you would expect the depreciation write-off to hit the income and expenditure statement. On this table, I'm actually seeing the depreciation being reversed in the cost of valuation, which is unusual. Why would you do that? And why is it not the income and expenditure statement? And also, question related to this same note, because I think one of the things I saw was a massive revaluation increase. Now, I was trying to figure this out. Is that the same increase noted in the income and expenditure statement?
Right.
Revaluations, yeah.
Well, if I start off, Councillor, and I'll explain a little bit about depreciation and the impact on income and expenditure, and perhaps if Thomas can pick up the revaluation question. So in terms of depreciation is doesn't actually hit the income and the expenditure account. Is it in terms of a charge? And Paul and Thomas, correct me if I've got this wrong because this is very techie for me. The way that we account for the way that we account for assets in terms of the impact on the revenue account is we do it through the MRP charge. So, for example, we have to make a charge to our accounts over the useful life of all the assets that we purchase. So, for example, if we buy a computer, it's given an asset value of 5 years. It costs us, for ease of purpose, it costs us £10. So every year we have to make sure that we charge £2 a year to the revenue account by the MRP, and that's how we reflect in the accounts the charges, the charge to the actual revenue account that the charge to the revenue account that we do every year. So we have a budget in our revenue account. I think it's about £20 million for MRP, and that's how we account for the impact of assets in terms of the revenue account. So that's how we account for in revenue. It's a slightly different way of accounting for it. Now, Thomas, I'm assuming I've got that correct. And then can you respond to the councillor on terms of the valuations?
Yes. In terms of the valuation, whenever we revalue an asset, we write any accumulated depreciation that we've charged on the asset in previous years back to zero. In other words, we adjust it against the opening value of the asset, which is why that depreciation is reversed. Mm-hmm. It's basically just a technical adjustment to make sure that the value of the asset and the value of the cumulative depreciation don't go up and up for forever, basically.
Okay, so in that case, it doesn't hit the P&L, but does your normal depreciation hit the income and expenditure statement? Was that correct, what Dawn said?
Yes, the depreciation does hit the income and expenditure statement, but we then reverse that depreciation impact out of the accounts below the line. Sorry, within the movement in reserve statement, and we replace that with the MRP charge that that Dawn described.
Because what we can't have, councillor, is we can't have depreciation in terms of the council tax calculation. We can't have that, so that hence why Thomas explained it's reversed out. But we do have the charge for the MRP, which is part of our council tax requirement calculation.
Okay, and where does the corresponding entry for the MRP sit? Because the depreciation kind of integrates with the fixed assets. So where does the MRP entry sit in the balance sheet, and where is it on these accounts? Would we be able to find it?
The MRP is not within the consolidating income and expenditure statement, because under accounting rules it doesn't actually count as expenditure. What we do is we just do a transfer from the general fund within the movement in reserve statement. So to see it, the relevant note is, just give me a second. The relevant note is 5.6.
5.6. Notes finish at 5.41.
No, 5.6 is on page, not 5.6 yes. Is on page 128 of the papers.
I got you, sorry, yeah. So the MRP, yeah, just a bit. So you're saying you're just moving the MRP from one reserve to the other. It's not a balance sheet.
That's correct,
item.
Yes.
So there's no corresponding balance sheet number. It's just sitting in the reserves.
Yeah, that's right. We transfer the money from the general fund to what we call an unusable reserve.
Okay, I mean, yeah, it's a deficit anyway, so I mean, no one's going to argue with that. So in that case, maybe what Dawn said about depreciation, so depreciation still has to hit the balance sheet somewhere, wouldn't it?
Yes, in the balance sheet, your depreciation will be deducted from the gross
Fixed
book value of fixed assets. So the figure you'll see for assets within the balance sheet will be the net book value.
Okay, so just to be clear, that adjustment was only because you had a revaluation. That's why you had it going back to the cost.
Yes, that's correct. Yes.
Okay, thank you. Now it makes sense. Thank you very much. Okay. Chair, I'll prefer some other members ask questions. I've got a couple of questions still, but if other members can ask, please.
Councillor Moshington.
Thank you, Chair. On page 137, could you explain a bit more on the fair value assessment?
137. Sorry, just let me find that page. I think what I'll do is I'll get Thomas to explain this. And I'm not avoiding questions. It's just Thomas does put all this together, so he's a lot more au fait with it. So Thomas, can you respond to the councillor on that?
Yes, I can. Could somebody just let me just remind me of the note number?
It's the note number
14.
14.
It's on page 45, Thomas.
Righto. Oh yes. Okay, we use the fair value. We've got three levels, I think, of that we use to value our investment assets and our financial instruments. The the valuation level that we use depends on the level of market evidence that's available for us to actually value them. So if there's a lot of market evidence available for an asset, we'll use level 1, which means basically there's an active market there. We can easily get a value for the particular asset in question without any problem. When we have assets that aren't traded in a market in that way, where there isn't quite as much evidence available, we have to then move to a second level and get and obtain our values in a different way, basically.
Okay, so we're saying here that our borrowing has almost a double fair value. What does that mean?
I'm sorry, could you repeat that question again?
Yes, we're saying in the same note, the last line, we're saying our borrowing for 1920 has a carrying amount of around 427 and a fair value of 831. That's almost double. What does that mean to the value of our borrowing? What does it mean to our borrowing? What information?
This is referring to the council's long-term loans that it takes out.
Yeah.
Many of those loans were being taken out a number of years ago at a interest rate that is much higher than the interest rate that's now currently available.
Right.
Which means that the fair value will be higher.
So what you're saying is, had we borrowed it today at the current rates, we could have borrowed the amount under the fair value?
Yes, basically, if we wanted to sell that loan on the market, we would have to sell it at a loss, because the interest rate on it is much higher than somebody could just take out. If someone were to take out a new loan, they could take it at a much lower rate. So we would have to, if we wanted to sell that loan for any reason, we'd have to sell it at lower than the face value of it.
Okay, so that's a parameter that's worthwhile when we're looking at the forecasting of our borrowing to bear in mind as well. Is that an accurate statement?
Sorry, could you repeat that?
Would it be accurate to say that looking at our forecasting for borrowing, it's a parameter that's certainly worth bearing in mind when we're looking at forward risk of interest rates?
I think. Do you want me? I'll answer this one, Thomas. I think in terms of our borrowing, what we have to focus on when we're looking at our borrowing is the borrowing that we've currently got. That is what it is, and it's at the rates that we've got it. So I think we're just over 400 million. That is what it is, and the reason why we cannot refinance. We look at refinancing that debt regularly with our advisors. One of the reasons why we can't refinance it is because the redemption rates against the loans to take away any benefit of refinancing. In terms of looking forward, unless I've interpreted your question incorrectly, we would look in terms of future borrowing, because we're not planning on doing any borrowing for the vast majority of this year. We would look at the rates that are available as at the point in time of needing to take out further borrowing.
Thank you. With regards to the current borrowing, so in the last period, 1920, we increased our borrowing by 76 million.
Mm-hmm.
And then we spent 76 million on repaying loans. Would it be fair to say we borrowed to repay?
No, I don't think. I think what we do is we will refinance those loans. So what we have is,
if we look at page, where is that? Same page, 137. Let me just look, or maybe I got the page number wrong. 100 and... Give me a second. So on page 98, we're saying that our borrowing increased by 76 million.
Hold on, just let me. So it's page 98.
That's when we're talking about the increase.
Yeah, I'm just getting to that page now.
And then let me just find where I found the 76. What does it say about repayment? We do have an entry about loan repayment somewhere. There we go. And then we have on page 144, note 524.3, we have repayment of short-term and long-term borrowing is also 76 million.
Sorry, so that's. We do refinance a number of loans. If we have got loans, coming up for repayment, and we don't have sufficient capital receipts. Just racing to get to page 144.
Sure.
Sorry, it's taking a. So what section of what? Oh yeah, so repayment of short-term and long-term borrowing. So.
I mean, it could be purely coincidental, the amounts are the same, but it seems that we repaid the exact amount that we increased our borrowing, or a similar amount.
In terms of the new borrowing that we took on?
Of the increase in borrowing, yes.
Yeah. We can put that back to you in writing.
Of course, and I'm
just
giving the floor to someone else to ask questions.
Yeah.
Councillor Ali, you need to unmute yourself.
Thank you, Chair Thomas and Dawn. My question is again on the revaluation of assets, particularly the buildings and the investments. There is a risk due to recession in future, the value might go down. So are you going to make any provision for that when you finalize these things, these accounts, statements?
No. Thomas, can you answer that? I don't think we do we? Can you answer that, please?
Yes, no, we wouldn't make a provision for it. However, we have identified the risk in the accounts. We've identified the risk that asset values may fall as a result of the pandemic.
Hi, Thomas, can you hear me?
Yes.
Yeah, I mean, is there any notes to the accounts in the statement there? Based on note?
Yes, I've just located it. You can find the mention in note 5.3.
5.3, thank you. Thank you, Thomas. I can see it. Thank you.
Are you happy, Councillor, to move on? Okay, I had a brief indication from Councillor Benjamin. It's that his hand. Councillor Benjamin, the floor is yours.
Thank you very much. Apologies, Chair, but I had a bit of difficulty with my computer. Dawn, if I could ask one question, please, and I'd like to focus in on page 157 of the document, in particular the pension fund, the Harrow Pension Fund. Could you clarify, because my interpretation of these accounts are that there is a long-term liability on the pension fund of £1.1 billion. Is that correct?
Just let me, I'm just getting to the page, Councillor.
Yeah. Page 157.
Yeah. And I am just going to ask Shelley to have a look at this as well with me, because Shelley puts the pension funds together. So I'm just getting to 157. Right. So can I ask you specifically which note, Councillor?
Sorry, which what?
Which point on page 157?
5.38.5, the scheme history. I'm just looking at the overview, and where it's got present value of liabilities, the figure of 1.104 billion pounds is given. Is that correct?
Yes, that will be correct. I'm just going to ask Shelley just to make sure I'm not telling the councillor an untruth. That is correct, isn't it, Shelley? That's our value of liabilities per our actuarial assessment.
Shelley Jones.
Yes.
Okay. Which leads me on to my next question. Now that figure is reduced by 696 million from the fair value of assets to produce a net deficit in the scheme of 407 million. But going up to 5.38.4, what I'm having a bit of difficulty with, and perhaps you can explain it to me, that's where the figure of 696 million comes from. But then it's got the actual return on scheme assets in the year was minus 99.5 million compared with the previous year, which was 53 million in the black. So why is there that difference from one year to the previous year?
Thomas, can you help out with this? I must admit I'm struggling.
Yes, I can help out a little.
Please.
These are all the figures that are calculated by the actuary. When it comes to the deficit, the scheme is designed so that future contributions will make up the deficit that you see. So although you see a 407 million deficit, that will be covered by future payments that the council makes into the pension scheme. When it comes to the return on plan assets, that's calculated by the actuary. I don't think I could add too much on why it's changed from one year to the next.
I mean, we have, if I just add to that, we have had our pension fund valuation this year. So we have got new valuations, and as Thomas says, what we have to do in terms of pension fund is we have a funding strategy for the pension fund, and we say that as part of that funding strategy, over the next 20-year period, we have to say what we have to set ourselves we say that over the next, what do we need to do now in terms of our strategy to make sure that over the next 20 years our pension fund is fully funded, so we don't have a deficit on the scheme. So every time we do an actuarial valuation, that's what we have to do. So that it is planned. So we set a strategy that says, in theory, over the next 20 years, our strategy in terms of investments will cover the deficit that we've currently got.
But the deficit that you currently got on the basis of the actuarial figures is 407 million, and that deficit seems to be increasing year by year. So when we're talking about the long-term projected viability of the pension fund scheme, it does cause me a bit of concern that our liabilities are just increasing. I mean, as I said earlier, the figure of 1.1 billion pounds in terms of the present value of liabilities is actually quite eye-watering. And I am concerned about long-term viability for the council to be able to, for the pension fund to be able to meet its obligations under the fund to employees of the council.
I mean, we can meet the obligations of the pension fund, because that's what we have to do, and we have, in terms, just to give you some assurance, and that obligation is either met through increased contributions from the council, or it is met by adjusting your funding strategy. Now our valuation of our fund, if we look at fund valuation from what goes to pension fund, has increased over the last 3 years because we've taken, I don't want to sound a bit too geeky, but we've taken a different strategy in terms of our investments to de-risk our investments. And when we set our pension, when we had our 3-year actuarial valuation this year, the actuaries were confident that we could achieve our funding strategy without the council having to put any additional funding into the pension scheme, which is a good position to be in. You're never going to get a pension fund. To be fair, you're never going to get a pension fund that is fully funded.
I accept that.
Yeah. But I think I think your comments are very valid because they do look very big figures, but it is something that is constantly reviewed to make sure that we are never in a position where we are running a risk of getting to that position that you talk about in terms of not having our commitments. And this is something, just to give you some assurance, this is something that is reviewed very regularly at the Pension Fund Committee. We review the value of the fund regularly. We make sure that the funding strategy that we've set is regularly checked to make sure is that being achieved. Do we need to change it? So it's not something we set and let it run. If it doesn't look like it's achieved, it's something that we would talk to the committee about changing so that we don't get ourselves into a position like you've explained.
Okay, thank you, Dawn. Thank you, Chair.
Councillor Bardia, did you wish to come back in?
Yes, Chair, I would like to. Sorry. Just a quick one, a couple of questions, hopefully they won't take too long. The first was on the position of the interest costs and costs for changing over the to cheaper loans.
Mm-hmm.
Do we have this? I did see the interest cost. Is that around 20 million, the interest costs to the council? I can't find the note. And yeah, sorry, what was my other question? I think I mentioned it, didn't I? Oh yes, the charges to the council for moving to a cheaper loan. So where is that reflected?
Well, no, what we do is our interest is, it's roughly about it's about £7 or £8 million per annum is our interest on our current borrowing. Now, what we do is so we have a profile of the borrowing that we have. So, you know, when that borrowing is due to mature, so when we have to repay or refinance that borrowing, what we look at is, because some of our old loans, and to be fair to the council, we haven't got too many of these now. If we, for example, got a loan that's due to mature in 5 years, it's, I don't know, at 4%, and we think actually we could get funding at this point in time at 2%, then we would, what we have to do is, what you often find is that the redemption fees to repay that loan back early don't make it any benefit, because what the loan provider will do is just charge you a redemption fee to make up for their lost interest. And that's a position that we do find ourselves in. But just to give you some assurance, this is something that we review regularly to see if there are opportunities to redeem any loans. But to be fair, over the last few years, we have had a lot of our sort of slightly more expensive loans come up for renewal, and we have been able to refinance them at much more cost-effective rates for the organisation. And I think we have seen quite a number of underspends on the capital financing budget over the last few years. Now, some of that, before anybody reminds me, is because we haven't spent the capital programme in full, but some of that is because we have been able to source cheaper loans, or we've used temporary borrowings.
I think, Donia, I'm not in any doubt. I think we are aware that you found cheaper loans, but I think the only thing I'm trying to establish here is what did it cost us to move to the cheaper loans, where it's reflected. And I'm still trying to reconcile this figure that you just gave of 8 million of interest cost. And I just saw a note which I can't find, which says the interest cost to the council is about 20 million. So I'm trying to reconcile the two figures.
Yeah,
Can Thomas help us?
I think, and I'm looking for the figure, because we have, in terms of capital financing costs, it's broken down into two, and we have our MRP charge and we have our cost of interest. So our cost of capital is made up of those two figures. Now I'm sure that and I'm sorry I can't tip this off my tongue out, and I'm looking for my report which details it. And so I think that the cost of the interest is around about 7 million, but I will email out to people to confirm that. And what we do is we don't have, there is
If I may
nowhere.
insist, I think Councillor Abadia I think Councillor Abadia is referring to note 538.3 on page 157. Interest cost 29 million.
Yeah, and I think that interest cost is made up of MRP and interest. Is that right?
I think, sorry, no, that's different because that's for the pension scheme.
Yeah, that's pension fund, yeah.
Yeah, no, there is definitely a note, and because it's so hard on the screens.
Yeah.
And so it's just understanding what is the composition of that note. So
well, what I will do is because our interest charges, as I say, are split into two. We've got capital, we've got the interest payment, which is the interest we pay out on our 400 and X million pound loans, and then we have our minimum revenue provision, which is that amount we have to charge the revenue account each year. Now we break that down in our capital programme budget, and I do apologise, but I can't think of the numbers off the tip of my tongue, but I'll send you that. But it is referenced every year in our report, in our capital programme report and our budget report. In terms of a cost for redemption, you won't see a cost to redemption because it's high. If the redemption cost meant that it wasn't viable to refinance the loan, we wouldn't do it.
No, sure, I understand. So you're saying it's not disclosed separately on this financial statement?
No, we wouldn't. It's not disclosed separately, and the reason is because we haven't. I mean, all the time I've been here, we haven't actually redeemed. We haven't paid back a loan early just because the redemption charges don't make it viable to do it.
Okay, now the fact we have, shouldn't there be some clarity or disclosure note? I don't think it was a small amount. It was substantial, I would say.
I don't think there is. I mean, I'll ask Thomas to come in. I don't think there is a specific disclosure note because we haven't redeemed any loans. That's where I'm struggling. Is that right, Thomas?
We haven't redeemed any loans in 2019-20.
Oh, okay.
We have in past years, but not the year just passed.
So am I mistaken here? Was it in the previous year? Sorry, in 18-19.
Yeah, there were some loans redeemed early in 2018-19.
All right, so nothing in 19-20. All right, thank you. My final question, Chair, and I don't know if I'm overlapping this question now with the section further down the line in the agenda. Just coming back to this valuation of the pension schemes. So just to be consistent, and if I understood this right, because yes, as you rightly pointed out, the asset value has been increasing, but when we actually look at the pension scheme accounts, the value has gone down by nearly 100 million, I think. Yeah, that's correct. So I'm just trying to get my head around, what the financial statements we're reading here, when compared to the actual pension scheme accounts. So I'm at a loss. Anyone know why this is the case, really, that, we've got different kind of valuations or liabilities. One shows an increase and one shows a decrease. So am I mistaken in reading these figures?
They should be consistent, shouldn't they, Thomas?
Actually, I suspect the figure in the pension fund will be the current market value of the assets. The figure in the accounts will be different because it is looking to the future. It's a future assessment of the returns. So based on assumptions looking into the future. So they will be different.
No, I don't expect them to be the same. I'm more concerned about the trend of an increase versus a great decrease of nearly, over nearly 10% or more.
I think
the actual value of the funds, right? Nothing else here.
I think on what you'll find on the pension fund, councillor, is the pension fund, the valuation of the fund does vary significantly per quarter. I think we monitor it per quarter. It does vary because we've got assets, we've got some assets on the stock market, so it does vary. And I think the way we have to look at the pension fund is that we have to look at it as a long-term scheme, and that is why it's subject to a triennial valuation. So it's revalued it's revalued every year to keep every 3 years to keep a check on the balance, but also to help smooth out some of them unders and overs, because it does vary over the 3 years. So that's why it's valued every 3 years. And what the actuaries do is look at the current value of the scheme and say is our funding strategy to get to is our funding strategy set to get to a balance, to get to a fully funded scheme over 20 years still valid. And that's why we adjust the funding strategy every 3 years. So I think if you did look at the pension fund on a quarterly basis, it does go up and down, but we have to look at it on a long-term basis.
If I could just add.
Sorry, quick supplementary. So would there be a requirement in terms of, I know we spoke about current market value versus non-current market value. So before these accounts are signed off or finalized in September, well, whenever that happens, would there be a requirement for a follow-up disclosure notice actually, because a lot has happened since end of March 2020. So is there any requirement to do a follow-up disclosure for market values for anything, you know, that we hold in terms of the portfolio, the pension scheme or otherwise?
I think we make reference in the, and I'm going to ask Jeremy, who's my pension fund manager, who's on the call, to correct me if I'm wrong. We have to declare in, I think we have to declare in the pension fund statement somewhere about the volatility of recent events, but we wouldn't do a formal valuation. We wouldn't do another formal valuation because we only do that every 3 years. Is that correct, Jeremy?
Yeah, that's correct. We just do a monitoring and regular reporting to the pension fund committee. Some auditors have in the past required in the main statement of accounts to have a post balance sheet note with the latest valuation figure of the assets round about the time of the sign off. So it may be that there's a short post balance sheet event note required saying that the pension fund's assets at the 31st of August or the 30th of September, whatever the closing position, the closest position is to the audit, were X, which will be probably a bit different from the figure in March. As an example, the value of the fund's assets that are going to the pension fund committee tomorrow night, which are at the end of July, the figure has gone up by about 100 million from the 31st of March figure. But that's in the pension fund accounts. Mm-hmm. The FRS 102 accounts is an annual exercise done by the actuary, and that's the ones that are in the notes 538 or thereabouts in the main accounts, and that's an annual exercise. But as Dawn says, the fund is a long-term exercise, which we review regularly and adjust the funding strategy to ensure that we will be able to meet the liabilities when they fall due.
Okay, thank you.
Okay. Sorry, I forgot to say, Chair. Jeremy's our interim pension fund manager, as Ian Miller left us earlier on in the year, so that's why we've got a new face with Jeremy.
Okay, yeah, that was helpful. Thank you, Jeremy. Yeah, just before we move on, just with regards to, it's mentioned throughout the report, the earmarked reserves reduction from 42 million down to 43. I think I understand the reasoning behind that. My question before we move on is just what, by way for you, Dawn, is what sort of satisfactory level is that at 43 million? Depending, you know, what you foresee, etc. Because another couple of 9 million takeoffs off of that in coming years, it could severely reduce the earmark reserve. So just by way of comment, please.
In terms of, because some of those earmarked reserves will be for specific things, for example, payments to PFIs, insurance obligations and such. So in terms of what we have in terms of usable reserves, we talk about this every quarter in our monitoring, is we've got our £10 million general fund reserves, and then we have I think it's about another 10 million set aside for things like business planning, business risk, etc. We are at the very lower echelons of the reserves, and we are not like other authorities that have significant chunks of money in reserves. I expect everybody's reserves position has changed. So as part of our financial challenges this year and how we manage the COVID impact next year, it is a real challenge in terms of how we manage that position without drawing down significantly on the small amount of reserves that we've got left.
Yeah.
And that is part of something that we're very much, we're very much engaged in at the moment as we go towards setting the draft budget. What we are trying to do to mitigate this is we are trying the very best we can this year. We did plan to draw down, I think it was about £3 million of reserves in this financial year to help manage the budget. We're trying not to draw that down to make sure that, we're really trying to keep a tight grip on the budget this year so that we don't have to make use of any reserves that we don't have to make sure they can stay on the balance sheet for next year. But being very honest, we do fall at the very, very lower end of the reserves. We have done for many years, and that is, that obviously is a concern to us with what's happening with COVID and our ability to manage that.
Okay, thank you. Well, dare I say, I'm sure reserves might be a discussion later down the line once we do know the fallout from COVID and the financial impact, but maybe a wider discussion at a later date. Okay, colleagues, if I can move to the recommendation then on page 85, where it asks the committee to consider and note the draft statement of accounts and the draft pension fund annual report, both for 2019-2020. So if that is agreed, we can move on. Is that agreed?
Yeah, agreed.
Thank you very much, and some helpful questions and scrutiny there from the committee, so thank you very much for that. I wanted to give that agenda item a little more time. I know there's keen interest across the committee. So moving swiftly on to agenda item 11 from pages 269 within our paper bundle, which is an information report, which is the internal audit and also the corporate anti-fraud year-ends report for 2019-2020. If I could bring in Susan Dixon to introduce the report. If you want to introduce both, I'll take the reports as read from members of the committee, and then in questioning, I will split them up so we can talk about the anti-fraud year ends, and then we'll talk about the internal audit one as well. So introduce both and then we'll separate for questions. Thank you.
Yes, certainly, Chair. I won't say very much really, because hopefully they're self-explanatory. The only thing that I would point out is that clearly the COVID situation has had an impact on our ability to complete our plans for 1920. This is largely because there's still a fair amount of work. It's not a clean cut of finishing work by April. There's always a bit of drift into Q1, which we end up completing our plan, and this happens every year. And obviously this year there was a lot of frustrations around actually completing that. So we are down. I think, considering the situation, I'm very pleased with both teams' performance. I think we did the best we could basically in the situation. And we certainly did enough work for me to be able to do a head of internal audit opinion, which is key and really what the plan is designed to do. I would just draw the committee's attention to on page 275 is what we were talking about earlier. That's the key factors that played into the 2019-20 opinion. And I have to admit, I've just spotted an error. So I do apologise, but on the last point, it says the annual review of governance identified one significant gap, and in brackets, one more than 18-19. It isn't one more, it was one last year, it was a different one. So I do apologise that I've just spotted that as an error. I think the only other thing that I would say is that we do for this year's plan, which will be coming to you in October, albeit quite late, and we've already done quite a lot of work that we would normally do in Q1 around the core financial systems, which is the same every year. It's not the same work, but we do work on core financial systems. There will still be an impact of COVID within that, so there might be slightly fewer audit days within that plan. We're actually working that up at the moment, because obviously what we had originally planned, we've had to revise, and that will be coming back to you hopefully in October. And so if you have any questions, Justin is on the line, but just to say that he has had some connection problems, so hopefully he'll be there to answer any questions that you have.
Okay, so we'll split the reports up then. So if we start with the internal audit element of the agenda item, if there's any questions on that first, Councillor Ali.
Thank you, Chair. Susan, just on page 275, you just mentioned there's a significant weaknesses, IR35. I just want some clarification. Is this something to do with the contractors working in the council on the long term, or could you just clarify it, please?
Yes, Councillor, it is, and it's a process that we reviewed of how the council handles the IR35 employees, and this is employees that, well, they're not employees of the council, so we're paying them outside of our employment. So if you have a temporary member of staff, most of them become employees. They're employees of per temps, and we pay them, and they pay PAYE tax, etc. But people that are outside of IR35 often have their own companies. So we're talking about, small companies, and there are a lot of regulations around that, tax regulations. Yeah. And this is a review. This hasn't come to you yet because it is still in draft. And again, the finalisation of that has been disrupted because of everything that's been going on. And we do now have a new director of HR. So basically, that will come to you once it has been finalised.
Yeah, my only comments that HMRC is very strict on this. IR35.
Right, yeah.
And if somebody is on long-term basis, you should bring it on page you earn, Just my comments. Thank you.
Yeah, thank you.
Councillor Bardia.
Thank you, Chair. Susan, it's good to see that some of the red flag items that we've seen in this committee previously have actually now changed to amber in the reassessed assurance rating. So that's really good to know. I just kind of struggled a bit in terms of the abbreviations, in terms of most of this, the progress seems to be marked under columns labeled I or PI, I think. Could you just explain that? Because, I mean, just following through the number of recommendations and at what stage they are. Do you mind clarifying what I and PI and whatnot stands for, please?
Of course, I do apologise. There was a note which has obviously fallen off the report at some point to explain that. I do apologise. Yes, I is simply implemented. SI is substantially implemented. PI is NI is not implemented. PL is planned, and PI is partially implemented. So we're looking, when we judge. When we reassess the assurance rating, we take the number that have been implemented and substantially implemented, and we put those together. That's how we do our original assurance rating, and how we do our reassessed assurance rating is by adding those together, and that gives you then the assurance rating. The percentage then relates to that.
Okay, now thank you. Now that's useful. And in terms of the follow-ups, so there will be ongoing follow-ups in all these items, I presume, especially that those that are red and some of them still happen to be amber.
We only follow up until they're amber because of that's our current policy. And actually, as you'll see from our performance indicators, we actually have struggled to implement that because we're such a small team. And I have to give I give more time over to actually doing new reviews. So once we get to an amber assurance, then basically we do not follow that up again. If we have a red original assurance and that only goes to red amber, or it doesn't move, for example, then we would do a second follow-up. But at the moment, we don't do a second follow-up as long as it's reached amber, mainly because of our resource situation.
Right. Okay. Just as a follow-up, yes, I did look at your performance tables, which is pretty good, or more or less achieved for 1920. And I suppose the question on 2021 we can ask you the next meeting. However, I just wanted to sort of just get a quick feeling for the low scoring area, which is the corporate performance indicator. Members, that's on page 281.
Yeah.
So the first table there. So that seems to be a bit low, although you're saying it's gone up a bit. So what kind of areas are we talking about here in the corporate performance indicators?
The core performance indicator, that's the implementation of the recommendations. So that is about the follow-up. So although overall, most follow-ups did improve their assurance rating, which is good. When you look at the actual implementation of recommendations at the time of follow-up, that is slightly lower than we normally get. So we're expecting all of them to be implemented. So management are still saying, yes, your recommendations are valid and we're still intending to implement it fully, but maybe they haven't quite got there at the time we do the follow-up. But what that is, I just wanted to be completely open, and I think from an assurance point of view, it's important that the committee is aware of these things, that is slightly lower than we have had in previous years.
And is there any particular reason why we had that kind of state?
I don't know, and I do think that I'm going to keep an eye on it throughout this year, and obviously it will be interesting to see what the outcome is at the end of next year. But as I say, I just think that we need to keep an eye on it. I mean, to be fair, there's been a lot going on. It could well be a bit of an impact from COVID. There could have been, that perhaps not everything was quite as implemented as far as it would have been had we not had that crisis. But again, I really need to be able to judge that by what happens at the end of this year.
Okay, all right, thank you.
Just on the follow-up audits situation, and I know within the report there talks about an officer vacancy, and I think a couple weren't met. So I think last time we met, we agreed the audit plan for the coming year. Would that officer vacancy capacity issue have an impact on what we've agreed last time moving forward, or did you say, Susan, that you tend to bias new ones to follow-ups?
So we've got a vacancy. The vacancy that I referred to in there came in April. Right. And so obviously there's been no opportunity to fill that post, and obviously normally if that post had still been filled, then we may well have achieved a little bit more of the plan and done a few more of the follow-ups that we were due to do, because it's one, I've only got 4 members of the audit team, so having 1 member not there, that's a quarter of the audit team, so it does have quite a significant
resource that position.
Sorry?
It's the plan to re-resource that position.
What I've done at the moment is we've got a temporary risk manager in who has got audit experience, and I'm intending to use him a little bit more flexibly with his agreement to actually help us with this year's audit plan. And I do want to have a look at the structure of the audit team before we jump in and do an automatic vacancy filling, but I will certainly be hopefully filling it temporarily, as I say, with the person that I have at the moment who's a risk manager.
No one else has indicated. And just before we move on to the second section of questions, I think again the audit opinion is good, which is positive, and I think from the traffic light diagrams it does indicate a positive direction of travel. So that's progress from where we have been, and so I often plug it here, the vast amount of work which you and your team do into the work behind the report. That element of the report is very vast, and so it's good to see that positive direction. So, okay, no one else has indicated. So can we just move on to finally the questions on the anti-fraud element of the report? Is there any members of the committee which want to ask any questions of our officer on that element? Councillor Ali.
Thank you, Chair. Susan, just a bit of clarification on page 286, where you said they mentioned matches. Can you just explain what does it mean? Housing benefit total matches 2639. Can you hear me?
We can hear you.
I think that's
Yeah,
Good evening, Chair. Good evening, everybody. My connection is playing up this evening. Apologies for that. I heard part of your question, Councillor.
Councillor Ali, do you want to repeat your question?
Page 286. I just
Yes.
need a bit of clarification on like housing benefit total matches 2639 and total processed 129. I mean, when you say matches, what does it mean?
Yes. So this piece of work is a data matching exercise that is coordinated by the Cabinet Office. So they do this every 2 years, and it's basically a rolling program where they take chunks of data that the local authority hold, and we're mandated to do this. So it's a mandatory piece of work. And that data is then matched with lots of other local authorities and other participating bodies, the NHS, Metropolitan Police, other police forces, fire service around the country. And where those matches hit something else, maybe another organisation. So there might be somebody that claims housing benefit in Harrow that is matched with somebody on a payroll, maybe somewhere else with another organisation. So they would throw that match back to both of the contributing organisations, and they would those organisations to investigate to make sure.
Justin, we seem to have lost you.
Thank you, Justin. So it explains anyway. Thank you.
We'll press ahead. We'll just wait for the internet to catch up with Justin. Councillor Abadi, you've indicated to speak. Let's hope that the audio is working with Justin's connection there. So if you want to ask your question, and if we can't get Justin, maybe Susan could help out.
Yes, thank you, Chair. My question, I think it's a bit of a add-on to what Councillor Ali said. Obviously, looking at the sort of key fraud areas and achievements seem to suggest that there is definitely sort of areas where it's going to be more likely than others. So obviously there's the housing and the waiting list and so on and so forth. So is there any sort of plan to say these are the likely areas, and can we do more work, or can you add more resources, because that's going to give us the highest level of outcomes in terms of spend compared to what you're spending. So are we getting any kind of indication from this report we're looking at today around that?
Oh, is that Justin back on? Would you like me?
Justin, you've appeared back on our screens. Did you hear the audio to that question, or?
No, I was still answering Councillor Ali's first question. That when my screen cut out.
Okay, so do you want to just paraphrase your question again, Councillor Abadi, just in brief? Justin,
yes, sure. So I'll just jump straight to sort of what I'm talking about. So looking at page 297 and 298, which
297,
which takes us to the end of our meeting, I suppose. So yeah, to the last two pages. I'm just looking at the final summary, which says the possible fraud savings, and then just breaking that down slightly to say, where are we getting the most savings in terms of what areas. So having looked at that, so my question to officers was, does that give us a better idea of where we should be doing more work, or are you planning to expand your sampler activity in these areas to say we are more likely to find fraud in this area? So have you got any such plans based on the results?
So yeah, so obviously that looking back to the previous financial year, in kind of partnership with what's happening out in kind of nationwide and national report, that would all go into a risk assessment when we draft up what are those high risks, what are the risks we've identified in here, and what is happening in London and what is happening nationwide for us to be then diverting our resources to. So all of those into the mix, and then we look at what the potential financial impacts and the reputational damage would be on the authority, and that would then feature in our plan for the coming year, which, as Susan alluded to earlier on, will be coming to the October meeting. But suffice to say that the fraud risk areas in terms of the impacts for local authorities hasn't really changed that much over the last few years. I suppose the big one at the moment that's obviously jumped out as a result of the COVID-19 crisis is the grants that we've been responsible for administering. So on the business side, so that will certainly be part of Susan and I's conversation when we're putting together the plans, which is already underway. So that will certainly feature on both of our plans moving forward. But all of these areas will generally feature. Housing remains a massive priority for us because of the cost it costs the authority, and the right to buy again is another big area, because if we lose a property that's bought fraudulently, then we've generally lost that forever. It's very difficult to get that back. Does that answer your question, Councillor?
Yeah, partly. Sort of. I think we'll get a chance to have another sort of review of this in October, as you say. So yeah. I think there's no point dwelling on it too much at this point. The only other sort of thing that I'm not trying to sort of question what you do, but my quick question was, in terms of the tabulation and achievements, is this independently verifiable or verified by some other sort of department to say your achievement figures are actually kind of correct? Because yes, firstly, we must kind of acknowledge that you overshot your targets on page 296 in terms of what your targets are and what your achievements are. In most cases, you've exceeded them, which is brilliant. But on the other hand, are they sort of verified independently by any other department or body?
Well, in terms of the figures, obviously what we've tried to do is if it's either a notional saving, where we try to use kind of sector standards that everyone works to. So for argument's sake, on the housing side, so the Cabinet Office are satisfied that if you take back possession of a tenancy, they would put a portion, a figure of 93,000 to that, because of the cost of that sublet potentially, what that costs the authority in putting somebody in temporary accommodation for a period of time, all the council's efforts in terms of looking after that tenancy, any legal action we have to take. So where possible, we would use the industry standards in terms of notional savings. But if we have a direct loss, which is obviously a sum of money, then we would use that. So we try and produce a combination of both to give us these type of figures. But on the whole, on the notional side, there is a fairly level playing field that most local authorities are in the same ballpark when they're using these figures.
And just by way of an observation as well, just to add my penny's worth in, I think what is pleasing to see is obvious transparency on that, on page 296, where that number 1, which is the performance indicator of recovery of 10 social housing, we've not achieved that, and very often that is achieved. And so that gives me confidence. Where we achieve, we declare, and where we're not achieving, the report is transparent with the committee. So that may add some weight to the response, Councillor Bardia.
Sure, I understand. Thank you.
Okay, in order to make some progress, we haven't had anyone else indicate in order to ask questions. So can I ask the committee to note the report?
Sure.
That's excellent, as per the recommendation. And we move finally on to our final agenda item, which is item 12, which is on the supplementary agenda, which is the annual health and safety report. Thank you, Justin, for your comments. You're a regular attendee of our committee, so we see you in October. So I understand this would be Paul Walker or John Griffiths to introduce this report.
Yeah, it'd be John Griffiths, Chair.
Over to you, John. If you introduce the report and in brief, if you like, take it as read and any questions are coming your way.
Yeah, okay. The year-end health and safety report basically summarises the achievements and the improvements made in April 2019 and March 2020. In that report, there's loads of statistics in there, so it's some good bedtime reading for you to do. But I'm going to sort of summarise some of the achievements and some of the improvements. In 2018-19, Paul Walker, who's the Director of Community, was keen to improve the culture, the health and safety culture of the organisation. And this report highlights this continuous improvement, and it is about continuous improvement. What the organisation is aiming to achieve is 3 clear objectives, 3 aims. Morally, we want to make sure that staff come to work safely and go home safely, and that we work in a safe working environment. Legally, we don't want enforcement action. We don't want to be breaking the law. We want to enhance the council's reputation as a good employer. Financially, we don't want to get things wrong. We don't want to get fines. We don't want costly fines. And as you're probably all aware now, you know, in press articles, it's not uncommon for organisations like that to get £1 million fine for not meeting health and safety. So the executive summary, I'm going to pick out some of the highlights on improvement. We have continued to develop the health and safety management system and provide support and guidance across the organisation during this period. The approach that I take, the council takes, is the Hsg65 model, which is about successful health and safety management. Which is basically a plan, do, check, act approach. And this approach is about continuous organisation learning model. So it's not a one-off, it's about over periods of time, we're trying to aim for it. So moving to the key work streams, we've carried out the annual review of the corporate health and safety policy, which is Appendix 6, which where the chief exec and the leader of the council signs off that policy and adheres to the statement of intent. We reviewed the corporate health and safety handbook. The handbook is available to all staff. They have access to a hard copy or electronic copy, and that is really like the guide for all staff members to have basic health and safety to make sure that they be able to work safely within their services. Training. This is about improving the organisation culture and making sure we continue to have competent staff. What was a great achievement for last year, we had 109 directors and senior managers and 3 councillors attended the British Safety Council course. And this is all about the culture change within the organisation. And the feedback that we got from that course was very positive, and well received. The training academy, over 400 staff on various health and safety courses went through that, which shows development and competence throughout the organisation. This shows the organisation's commitment to continuous improvement and moving to a positive health and safety culture. Moving on to inspections, audits and site visits, 43 audits on corporate teams and schools was carried out last year. The average audit score for the corporate teams was about 84.5%. For schools, it was 93.1%. So that was probably the first time really managers, services, schools really got audited to that level, which I think has been a good score. However, there's still improvement, and obviously the audit scores will get more tougher as the years go on. But I think for the first stab, I think they've done really well to get achievements of 84.5 and 83.1%. Accident statistics, again, a great achievement. We had no enforcement notices on Harrow Council from the HSC, which is, I think, is a good achievement, especially in today's climate, where a lot of organisations, even councils, yeah, are getting fined quite a bit of heavy money for not managing health and safety properly. So that was a good reputational outcome for Harrow Council. In this period, we had 482 incidents. This includes all near misses, so all near misses were counted in that, but this is for council employees only. There has been a 20.9, or let's say 21% decrease in the number of accidents and incidents last year. The top 5 accident types, yeah, including schools, and this also includes all children, contractors, and members of the public. And the top one was challenging behaviour, where we had 304 incidents, physical assaults, which are 213, slips, trips and falls, 155, hit by a moving or flying object, 39, physical contact, 65. So there's some big numbers in there, but please note, yeah, the vast majority of these are in schools, in special needs schools, yeah, where they obviously report any bites, any scratches, any falls or anything like that. So most of those were in the special needs schools. There has been also a decline in the number of RIDDLE reportable incidents. RIDDLE reportable incidents are the most serious incidents which needs to be reported to the Health and Safety Executive. We had eight reportable in 2019-20, 22 reportable in 2018 and 19, 33 was reported in 17-18. So there's 14 less last year, which is, I think, is a good performance. It's a good outcome. I think we're moving in the right direction. Areas of improvement. Management self-audits. This is about management, frontline managers taking on responsibilities for health and safety, and it's a requirement for managers to do a management self-audit of their teams. Yeah, so it's a little bit of encouragement that we get all managers to do it. We had quite a few managers do it last year, but we need all our managers to at least carry out one audit. Senior managers tours. There was a good uptake on this. This is about senior managers walking around, asking questions, looking at the services, not just their services, but other services outside their remit. I think that was a good take up last year, but we need to enhance that and continue to do that. Risk assessment training for managers, especially with the COVID-19, enforced a lot of issues on managers on how to develop risk assessments in relationship to COVID-19. So we're setting out a qualification, a training qualification for managers to be more competent in carrying out risk assessment generally, and also facing COVID-19. Fire safety audits and fire risk assessments from our buildings. We wasn't 100% compliant last year. That needs to be addressed this year, and measures are being put in place to make sure that happens. So we need to make sure that all our corporate buildings and our community schools, that there's an up-to-date fire risk assessment. General health and safety training. Again, we're going to get managers going through a high field qualification at the academy this year. So we're concentrating now on developing our first line managers. Health and safety groups. We have the Corporate Health and Safety Board that meets monthly, and this includes the trade unions as well, which is well received, and this is an opportunity for the trade unions to bring in issues that they want to raise, and vice versa. Majority of organisations usually do this quarterly, but religiously we've done this monthly, and it's been quite a good success in identifying and raising health and safety significant areas. The depot health and safety group meetings quarterly. Going forward, this will be chaired forward with Mike Butler, the Director of Environment. Safety circles have been well held consistently before COVID-19 pandemic. And we will continue to carry out safety circles, and there's obviously other groups and health and safety meetings that carries on throughout the council. On occupational health, we still use Health Management Limited to provide the council with an occupational health service. and this is overseen by HR. This is not something that the corporate health and safety team manages. It's looked after by HR, but I've included it into the report because there's some statistics that might be useful for you to have a look at as well. Sick absences referrals is still undertaken by health management. That will be either by phone or face to face. We've still got the 24/7 counselling service for our staff, and also the EAP service, the Employee Assistant Programme, yeah, for all our staff 24/7, and that's in Appendix 4. Just moving on, finally, what's going to be the plans for 2020-2021? Well, we can continuation of the safety teams across the council in line with the 3-year strategy, supporting the council. We're going to concentrate on COVID-19 risk assessments, about training managers to make sure they're more competent in developing the risk assessments. We're going to review the COVID-19 risk assessments, and we're going to put this on a risk assessment tracker to monitor any compliance or any information that comes from the government guidelines on that, so we can track all those risk assessment for an audit purposes as well. Training qualifications, we've got 2 courses, as I said. We're going to have managers going on a higher field qualification, which is, I think, is a level 3, which is a 3-day course, and also the risk assessment qualification for managers as well. That will enhance the COVID-19 pandemic that we have at the moment. And manage the key performance drivers on the corporate health and safety plan. There's a number of key drivers that we need to achieve. And that will be for the 2020 and 21. So overall, I think we've done really well in health and safety. There's still much more improvement what we need to do, but for the culture change, I think we're moving in the right direction, and it's been quite positive. Any questions?
Okay, thank you, John, for that very detailed introduction. I'll open that up to the committee for any questions. Does anyone? I have a couple, so I'll let the committee members go first. Councillor Ali.
Just a question on fire. Are there any buildings, council-owned buildings or privately owned buildings with the fire risk claddings?
No, we in housing we've
have
got,
you identified any, and have you done anything?
No, we've not got any of that, the cladding. Yeah, so for the housing stock, yeah, we've got quite low rise housing stock. So we haven't got no high rise buildings.
Councillor Ali, do you have a supplementary?
Yeah, I understand. I think there was a couple of buildings in Harrow, not council, but privately only, like a Baystock house in the in Harrow Town Centre. So they had some problem with the cladding.
Councillor, I'm not aware of those private dwellings, but I'm happy if you send me an email and I can find the relevant officer that can answer those questions for you.
Okay, thank you.
Councillor Bardia.
Yes, Chair, thank you. Just a quick question, John. So yeah, thank you for this detailed and very extensive report. I can clearly see a lot of work and effort gone into collate everything to give it to us as a report. Is there any system of recording all this in one central place so it's easier to keep track and follow up at all?
Well, the council's got the Hsg65 system, yeah, which is meant to be the one sort of system where we capture all the relevant health and safety. So things like policies, risk assessments, safe systems of work, training records. Yeah, we have got a council system. It's work in progress. It's not perfect, but we have got a system that should capture all this information.
Excellent. And in terms of integrating with any kind of new planned IT changes, is it going to be still compatible and being able to integrate properly going forward?
Hopefully, with most systems now, that they can integrate with each other. Obviously, there's a cost element to each time you do that, but most systems will be able to integrate.
All right. Thank you, John.
You're welcome.
I've just got a couple of quick questions, John, if I can. Firstly is on page 14. It's Appendix 1, the first page of the appendix, where we talk about exposure to or in contact with a harmful substance. We've always, I think in the past, we've often used the word asbestos, so that seems to have disappeared from that element of the report. And there's 6 incidences. So I just wanted to, if I could ask, what our current regime looks like for asbestos surveys amongst our portfolio and our estate. Obviously, that does, I'm not assuming all 6 could be asbestos, for example, but what does our current regime look like in being proactive in?
The asbestos survey is a statutory requirement for us to carry out for our buildings an asbestos survey. Yeah, for our corporate buildings we have an external contractor that comes in and updates the buildings, the asbestos survey. So that's been updated. And in council, then the council housing stock again, there's an asbestos surveyor who works in housing. He carries out those asbestos surveys to make sure those buildings are appropriately compliant.
Okay, and my second question is with regards to the numbers within the report of incidents of people falling from height. And before going into my question, of course, I acknowledge the huge positives of the report. The 3-year improvement, you said it's working, and it clearly is. There's a reduction of 20% in accidents and riddors, etc. So I acknowledge all the positives, but just with regard to some of these incidences of falling from height, there was only 2 riddors. What do we consider as a falling from height? Because I would assume you'd have more riddors if 32 incidences of people falling from height. So I just wanted to understand that element.
Well, there's no distances. If you're only about an inch off the floor when you fall, yeah, it's classified that you fell. Yeah. Right, so if you want to,
trips and falls, maybe not falling from height. So maybe we could readdress the balance of that, just because in these reports as councils we look at the alarm, some of the figures that jump out at us, and 32 falling from height looks quite serious. But I take what you said. You've clarified that. So. Councillor Barder, you're still indicating, do you want to have a final question, or should we move to conclude the recommendation?
No, Chair, I think it must have still been up from last time, so I'll go with that. Thank you.
Okay, all right, well, thank you very much, John. This is a regular report we get, so I'm sure we'll see you again soon. So we now move to the recommendation, please, committee, which is on page 3 of the supplemental agenda. Can we agree to recommendations and note them?
Yeah.
Agreed. Thank you very much. Okay, and that just leaves me to introduce item 13, which is any other urgent business, of which I haven't been alerted to any. So that concludes tonight's GARMS committee meeting at 20:36. And thank you for your input and your questions and your scrutiny tonight, colleagues. And I usually often say safe journey home, but I'm guessing we all are. And so enjoy the rest of your evening and good night. And thank you to the officers for staying with us this late as well.
Thank you, Chair.
Thank you. Bye-bye, everybody.
Good night.
Thank you.
Bye.
Thank you, Chair.